Hi guys, welcome back to TipRanks. My name is Annika and we love to hear at TipRanks what you guys think of different stocks you're looking at. So if you have any stocks you're looking at, leave them in the comments below. Today we're looking at 3 consumer tech stocks that are deemed a buy and have amazing upside potential. While investors are thinking of their strategy when it comes to investing in the current state of the economy, consumer tech stocks are thriving. Consumer tech is a booming sector in the tech industry. We've seen a lot of strength in the consumer market, which suggests that the demand for consumer tech products is persisting. For those that want to invest in the space, there's so many options available, from fintech to 5G stocks, as well as e-commerce stocks. But where do we begin? Well, looking at the TipRank platform for guidance will definitely help educate you. Well, there's fantastic news. TipRanks is offering a 30% off Black Friday discount, and this runs through Thursday into Saturday. I've linked the coupon code of this premium plan down below in the description box, so definitely check that out. The first stock is T-Mobile, and its ticker is TMUS. T-Mobile is a consumer tech company that is also a leader in the 5G space. The company continues to deliver advanced 4G LTE and transformative 5G for the population. It also provides its users value and quality. It's also one of the largest wireless carriers in the US. The current price for TMUS is $115.61, and the analyst rating consensus is that it's a moderate buy. However, the analyst price target is $165. This is a 42.72% upside based on 15 Wall Street analysts offering 12-month price targets. In its latest Q3 2021 earnings, the company reported that it has a post-paid net addition of 1.3 million. Best in industry, and it's raising 2021 guidance. It also reported a record high service revenue of $14.7 billion for the quarter and a net income of $691 million. The postpaid phone net additions of 673,000, 2.1 million year to date, increased 50% year over year. The TipRanks Smart Score deems it to be a 6 in that it is neutral when it comes to outperforming or underperforming the market. However, it's slightly skewed towards outperforming the market. Analyst ratings deem it to be a moderate buy, but TipRanks investors, however, are very negative. Blogger opinions are bullish as well as news sentiment, which is also bullish. But hedge fund activity has decreased and technicals have been negative. Return on equity was 5.04% for the trailing 12 months. On Monday, the company announced that it reached its 2021 goal of covering 200 million people nationwide with ultra-capacity 5G. This gives a majority of Americans high-speed 5G performance. This is on top of another third-party report that confirms that T-Mobile delivers the fastest 5G download and upload speeds in Cincinnati, Cleveland, Orlando, and Salt Lake City. Looking at the stock chart, the share price seems fairly undervalued, especially given it was reaching almost $150 per share around July 14, 2021. The second stock is FUBO TV, and its ticker is FUBO. FUBO TV is becoming an increasingly prominent member in the video streaming industry. There was a recent slowdown in industry leads such as Disney, so investors had been concerned about the growth. But there are several key positives that allow FUBO to stand out from the crowd. The first is that the platform focuses on live sports as well as related gameplay analysis content. This sort of gives FUBO its own niche within the video streaming industry. FUBO is also actively working to bring a layer of interactivity to its subscribers via live sports betting services. The current price for FUBO TV is $20.49. The analyst rating consensus deems it to be a moderate buy, but the analyst price target on FUBO is a whopping $46.33. This is a 126.11% upside based on 8 Wall Street analysts offering 12-month price targets. The company released its Q3 2021 results. And the company delivered triple-digit year-over-year growth during the third quarter in total paid subscribers, and this was up 108% to 944,605. Total revenue was also up by 156% to $156.7 million, and advertising revenue was also up by 147% to $18.6 million. Viewership hours also reached record highs, with FUBO TV customers streaming 284 million hours of content during the quarter, and this was a 113% increase year over year. FUBO TV also added 262,884 net subscribers during the quarter. The TipRanks Smart Score deems the FUBO TV stock to also be a 6 in that it is neutral when it comes to outperforming the market. Analyst ratings are a moderate buy. Despite that, TipRanks investors are very negative. Blogger opinions, however, are bullish, and so is news sentiment. Hedge fund activity has decreased, and technicals, as we just saw, have been very positive. But the return on equity has been negative 80.42% on the trailing 12 months. But looking at their stock chart, the FUBO price seems relatively undervalued, especially given the highs we saw between December 2020 and January 2021, where the price was $62. We're currently sitting at $20.18. Just last week, the company hit the 1 million subscriber milestone. Also, they announced plans to acquire Molotov, which is a French streaming service provider. Combining all of this with FUBO's game offerings that are going to go live this quarter, FUBO is currently in the radar for many investors. The third stock, which many of you guys know, is PayPal Holdings, and its ticker is PYPL. As we know, PayPal is at the forefront of the digital payments industry. It currently serves 400 million customers and merchants across the world. It also operates as a payment processor for auction sites as well as lots of different merchants globally. PayPal released its Q3 2021 results, and it reported that its total payment volume, TPV, reached $310 billion, with 416 million active accounts. This was growing 26% and 24% on an FX-neutral basis. Net revenue was $6.18 billion, growing 13% on a spot and FX-neutral basis. EPS was 92 cents compared to 86 cents in Q3 of 2020. They had 13.3 million net new active accounts added, which ended the quarter with 416 million active accounts. Operating cash flow was $1.51 billion, growing 15%, and free cash flow was $1.29 billion, growing 20%. The current price for PayPal Holdings is $187.92. The analyst rating consensus is that it's a strong buy. The analyst price target on PayPal is $276.04. This is a 46.89% upside based on 30 Wall Street analysts offering 12-month price targets. The TipRanks Smart Score is an 8 in that it is more likely to outperform the market. Analyst ratings deem it to be a strong buy. TipRanks investors are also very positive. Blogger opinions are bullish. However, hedge fund activity has decreased and technicals have been negative. But the insider activity shows that many have bought shares, and fundamentals show 24.33% return on equity for the trailing 12 months. Looking at the stock chart, it looks like we're relatively undervalued at $188. Well, earlier this year, there were some pretty high points between February and March where the stock price reached $304.79, as well as around July, August, where it reached $308.53. So it seems like where we're at seems relatively undervalued. So guys, let us know what you guys think of these three stocks in the consumer tech segment. Also, remember that we've got this fantastic deal with TipRanks where you can get 30% discount on the Black Friday sale. It starts on Thursday and it goes through till Saturday, and all the details are linked down below in the description box. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Remember, this is not financial advice. I'll see you guys in the next video. Bye!